In this video, traders, let's talk about simplifying your strategy. Stay tuned. Hey guys, warm welcome to you. Right, so I'm going to cut straight to the point. Too many traders are overcomplicating their strategy. I'm going to hold my hands up and say that I've done exactly this, but I've learned that over the almost 20 years and about 4 weeks time, something like that. Maybe I should have a little party. We're in lockdown at the moment in the UK, so it's not going to be a great one. But anyway, I digress. Simplifying your strategy. You know, we overcomplicate things because we think that many of you and I are kind of people who think that we should be doing more and we should be making things complicated. The more complicated things are, the more value they're going to be, and the more in the real world, so to speak, the more complicated a problem is or a task is or the solution is, the more that someone can ask for the money to fix it. You've got a brain tumor, needs surgery, that's going to cost you a lot. You've got a really unusual extension to be built in your house at an indoor pool, and we have a sauna, a steam room, an underwater viewing panel. That's going to cost you a lot. If you just want a new wall put up on your front garden that's a little bit, it's going to cost you. You get the idea. You know where I'm going with this, guys. The point is we tend to think that if it's complicated and challenging, then that deserves a higher ticket to it. And in the real world, maybe it does. But in the trading world, it couldn't be further from the truth. There's so many people who are overcomplicating things, got all these indicators, all this stuff, there's so many things on there, believing that's the way forward, and it's not. So I want to give you a challenge, guys. I want to challenge you this, and this is something we talk about just to simplify the plan. Just to, the reams and reams of stuff is fine, but at some point you've got to distill it down into kind of an elevator pitch. And this is sort of coming from this, like simplify your strategy. You know, we can have all these rules and fine, but ultimately, why not make life easy for yourself? Simply put, if market is in an uptrend, I'm trying to find areas of support to buy. Simple. Now you can go into the nuance of that and say, well, what defines a support level? Am I looking for a double bottom? Am I looking for a pin bar through support? You can go into details, of course, without going crazy, but simply put, and you know this yourself, guys, if a market is trending up, then buying at support is a profitable strategy. You don't have to back test this. You guys don't have to put it through the ringer and kind of work out exactly whether I'm right or wrong. You know that if you're in a bear market, if you're selling at resistance, you are going to make profit. Now, of course, the challenge comes with when the market changes, the trend at the end, and I know that that's what you're thinking, like, well, that's fine. But the thing is, as you probably know as well, trends always continue for way longer than we expect them to. We expect them to reverse and they'll continue. So why not align yourself with two of the facts of the market? The trend is your friend and will keep going for longer than you think. And buying at support, however you define that, I know it's open to kind of interpretation, but buying at support in an uptrend will be profitable. Use that as your kind of foundation and then build from that. Now, again, don't go overcomplicated and start doing stuff that makes it complicated. But all then to do is to say, right, well, why don't I just find stuff that's an uptrend? How do I filter that? We don't have to get too complicated. You can use an eyeball. You can use any kind of screening thing. There's all sorts of ways of screening. And how do I define support? Well, I'll look at the chart. I'll look at the chart and I'll go, there's a level of support there. So if we're here and we come back and we hold that support, I'm going to buy there. I'm going to have a stop here. Oh, there's another level of support. Another level of support is here. We didn't get back to it. Fine. Resistance turned into support. Did we get back to it? No. Resistance turned into support. Here we go. Yeah. I bought it. It got stopped out. Fine. Resistance turned into support. Great. Should I be looking to buy as it comes back to here? Maybe price comes back and tags that. You get the idea. The point is, guys, if you don't have to use my ridiculous whiteboard chart. Look at any chart for yourself on an uptrend and see levels of support, how often they hold versus how often they don't. Now, they're not always going to hold. You're not always going to be right. But if you can use that as a framework, knowing without having to back test or anything that buying an uptrend works, that buying at support in an uptrend works, okay, how can I then refine that with risk management? How can I refine that with the way I want to enter? How can I refine that and make some kind of tweaks to it, but using that as a solid base? It's simple, it's understandable, it's very easy to grasp, and you can always go back to basics. Similarly, you can say like selling resistance in a downtrend. I think we overcomplicate things as traders because we think, I'll have to have this indicator that gives me this sign and that and the other, and we forget the market is going up or down because money is flowing one way or the other. So why not just align the strategy with that. I'm going to only look for longs at support in an uptrend. Simple 3-line strategy. Nuances, fine, but it's very, very simple to understand, and the definition is there. And you know as well in your mind, the confidence is like, well, you know, uptrends, you know, if they keep going, they're going to keep going, and it's going to go higher. And if I'm buying, it's going to work for me. Now all I've got to do is time it. So if I wait until it pulls back and finds some support, I know I'm not chasing at least. So that's a good starting point as any. I know I'm going to pull back because it's support, and I know that I'm not going to have to sit through a pullback because it could go lower. But at least I've got the right attributes. I've got this trend direction, and I've got waiting for the pullback. And then from then on, the rest is almost details. It's almost details. And then of course, yes, have a strategy that understands when the trend is ending, when you start to back off the throttle. If we start to consolidate a little bit, maybe don't play that game. You have those nuances in there, but simplify things, guys. I promise you this, if you simplify it, you'll feel better. I can't say, oh, you're going to suddenly become Paul Tudor Jones overnight, because you're not. But there's simple factors. If you do simplify your trading strategy and just distill it right down and be at peace and be comfortable with the fact that it's simple, you will feel so much better about it. Take care, guys. See you next one. Bye-bye.